Hey everyone, welcome back to Corporate Decoder, the place where we break down the big corporate secrets. And buckle up because today, Micropolis Holding Company is in the hot seat, and their latest filing might just reveal a company trying to engineer its next big move, into the public spotlight that is, in today's filing. We're diving deep into Micropolis Holding Company's amended registration statement, a document outlining their plans for a significant resale of ordinary shares. Think of it as a company telling the world, hey, some folks who got our shares early are ready to sell, and here is the paperwork. But what does that actually mean for the company and for you if you are thinking about investing? This filing is basically a prospectus, a crucial document that gives potential investors the lowdown on what is being offered. Specifically, this one is about Streeterville Capital LLC, who are looking to sell up to 7.1 million of Micropolis's ordinary shares. Now, these shares aren't being sold by Micropolis itself, so the company isn't pocketing the cash from this particular sale. However, they might get some money if a warrant tied to these shares gets exercised for cash. That warrant could bring in up to $25 million, but there is absolutely no guarantee it will be exercised that way. Let's fast forward a bit. The company's ordinary shares are already trading on the NICE American under the ticker MECRP. As of late October 2025, there were roughly 19 holders of record, but that number is much bigger when you consider brokers holding shares for their clients. The last reported price for their shares was $2.24. This resale offering is a big deal because if all those shares hit the market, it could really shake things up, potentially pushing the stock price down and making it a bit more jumpy. Now, let's shift gears to what is going on inside the company. Micropolis Holding Company itself was only incorporated in February 2023, but its subsidiary, Micropolis Dubai, has been around since 2014. Working in robotics, they specialize in autonomous mobile robots, or AMAs as they call them, which are essentially self-driving industrial robots. The big catch here is their operating history as a combined group is pretty short, which means predicting their future based on past performance is a real challenge. And here is a really important point they flag: they're currently a pre-revenue company. Most of their projects are done in partnership, and they don't expect to see serious money coming in until they start commercial production of their robots, which they hope will happen sometime in 2025 or early 2026. This means they've been operating on losses for a while, and their auditors have actually issued a going concern opinion, which is a polite way of saying there is doubt about whether they can keep their doors open. That is a big red flag for any potential investor. The industry they're in is moving at lightning speed. They're worried that the rapid progress in robotics and artificial intelligence could make their current products outdated pretty quickly. To combat this, they're pouring resources into research and development, R&D, but honestly, there are no guarantees they can keep up. Funding is another major hurdle. They need cash for development, marketing, and just running the business. If sales fluctuate, costs rise, or the economy takes a dive, they could be in serious trouble. The filing warns that any decision to raise capital could dilute what current shareholders own, and if they turn to debt, it could increase their risk profile. Speaking of marketing, they've spent a noticeable amount on it, over $400,000 in the first half of 2025 alone. They're trying to get the word out because remember, they're pre-revenue, but they also admit they might not be able to market effectively or affordably, which is a pretty honest, if not alarming, disclosure. And here is another major risk: they depend on just a few customers and suppliers. As a company that customizes everything, this is understandable, but it also means losing even one big client or having a supplier stumble could seriously hurt their finances and their ability to grow. Intellectual property is a hot topic in tech, and Micropolis acknowledges they don't always own everything they develop, especially in those partnership projects. This shared ownership could make it trickier to use or profit from their innovations in the future. Then there is the inherent risk of making complex machines. Software glitches or design flaws in their robots could lead to anything from operational hiccups to actual accidents. Recalls or modifications would be incredibly costly and damage their reputation. Finding and keeping skilled people in AI and robotics is proving to be a huge challenge for them. The departure of key employees could really disrupt their operations and slow down their innovation. Most of their operations are in the GCC region, which means they're vulnerable to the ups and downs of the oil and gas industry. When oil prices dip, so does the economy, and that can impact their potential customers' spending. Let's talk about the shares themselves. Their stock price could dip below $5, which would classify it as a penny stock. This comes with all sorts of restrictions for brokers selling these shares, potentially making it harder for investors to buy or sell them and affecting their overall liquidity. Don't expect any dividends anytime soon. They plan to reinvest all their earnings back into the business, so any return on your investment will have to come from the stock price going up. And as we've seen with their current financial situation, That is far from guaranteed. Staying listed on the Nice American is also a concern. If they don't meet the exchange's standards, their shares could be delisted, which would really hurt liquidity and market price. Now, about their structure, they're incorporated in the Cayman Islands, which offers certain legal and tax advantages. However, it also means that enforcing legal judgments against them and their directors might be tougher for investors, especially those in the US. Let's look at the numbers, the real meat of any filing. As of the 30th of June 2025, their total assets were about $6.9 million. That sounds okay, but critically, their total deficit, which is essentially accumulated losses, was a whopping $16.8 million. They have significantly more liabilities, over $17 million, than equity. Looking back, their accumulated losses are truly staggering. As of the 31st of December 2024, it was nearly $50 million. For 2023, it was over $27 million. This pattern of increasing losses clearly shows they are burning through cash rapidly. Their revenue figures are tiny, almost negligible. For the first half of 2025, it was just under $17,000. For the full year 2024, it reached just over $35,000. This is incredibly low, especially considering the significant expenses they are incurring. A huge chunk of their short-term liabilities, over $21 million worth as of December 2024, is owed to related parties. This means they owe a lot of money to people connected to the company, like their shareholders and directors. While they assert these loans are being repaid, the sheer amount is noteworthy. Their cash flow from operating activities tells a grim story. For the first half of 2025, they used over $10 million in cash just to operate. In 2024, that number was over $13 million. They are not generating cash from their day-to-day operations, which is why they are dependent on financing. Despite these challenges, Micropolis has a plan. They aim to increase their market share by targeting industrial automation, healthcare robotics, and consumer robotics. They want to develop a sophisticated product roadmap and invest heavily in R&D. They're also looking to build partnerships and manage their supply chain effectively, all while trying to maintain a strong brand and reputation. Even though they're pre-revenue, they still have employees, and one note mentions a significant court ruling where they had to pay over 140,000 dirhams in end-of-service benefits. This highlights that even in difficult times, there are financial obligations to meet. Looking at the specifics of that secondary offering, Streeterville Capital, LLC is the main selling shareholder. They don't actually own any shares outright yet, but they have warrants and a convertible note that would give them up to 7.1 million shares. If they sell all those shares, it would represent a huge chunk of the company, potentially causing massive dilution for existing shareholders. The leadership team seems experienced with names like Marwan Al-Sakul, Farid Al-Jawari, and Desmitry Castahoru. Farid Al-Jawari, the founder and CEO, has been with the company since its start, evolving it from software to robotics. Desmitry Castahoru, the CFO, brings a strong finance background from luxury retail and automotive industries. Now let's put on our analyst hat. Micropolis Holding Company is in a fascinating but incredibly risky space. Robotics and AI are the future, and their ambition to carve out a niche, particularly with governmental partnerships, is smart. However, the financial reality is stark. They are bleeding cash, have minimal revenue, and are heavily reliant on external funding and related party loans. The short operating history as an integrated group and the reliance on a few key relationships are significant vulnerabilities. While they have a clear strategy, execution will be paramount and the path to profitability looks long and uncertain. The significant dilution risk from the resale of shares, coupled with the ongoing cash burn, means investors need to be extremely cautious. This filing paints a picture of a company with big technological dreams and ambitious goals, but also with substantial financial hurdles to overcome. It is a high-risk, high-reward scenario, and as always, do your own research before making any investment decisions. Alright, that is our breakdown of Micropolis Holding Company's filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.